Hi, I'm Wack.
Hey, and I'm Pat. Thanks for joining us for the 90th episode of the Weekly Orbit for Friday, February 21st. We've been gone for a couple weeks. I forgot to say, Whack, at the last episode, hey, I'm going on vacation next week. I won't be there. Uh, so apologize for that, for the break, but it was a good break for me. And we'll talk about that later. But how you been? It's been a couple weeks since I've seen you.
Yeah, it's been okay. It's been hectic and whirlwindy in crypto, and I feel like things are happening at 1,000 miles per hour. It's just really breakneck, like just nonstop crypto stuff. So it's been going.
Yeah, I've been totally out of the loop. I took a couple weeks and really I didn't read anything. I stayed out of the news. I really just had a nice time taking a break from everything. But I came back and there seems to be a lot going on, especially with the rETH discount almost gone. So that's exciting. We'll get into that. But let's touch on markets first. And I think last time we were at around 2,800 on ETH, and I think today we're right around the same. It's been about the same, I think, in the last couple of weeks. Whack. I guess I haven't missed much.
Yeah, we're up 1.7% in 14 days. So
Yeah,
ETH has been flat in that time. And that's fine. Like, other cryptos have moved up and down. The big movement came with Solana, really. Like, that has not kept pace. And ETH has been making up ground on Solana quite a lot in the last couple of weeks. That's because of like the meme coin like thing imploding, pretty much, the meme coin casino. Um, but that's been a big news story of the last couple of weeks, is the whole meme coin on Solana, like celeb max grifting stuff. It looks like it might be dead, but you
really.
never know with these things. Like, they always kind of come back in another form. But
Yeah.
um,
What's the
that's
Trump
what we've
coin
seen.
doing? I'm
I
just
haven't
curious.
followed the
Yeah.
price of the Trump coin, but yeah, I don't think it's been doing too well. It's like, yeah, $17 down from 70 at all time high. So if you go to the 1 month view, you'll be able to see what it looks like, because it's been out for about a month now. I think it came out,
Mm,
yeah, pretty much just over a month ago. So it's like down only,
yeah. It's down 59% in the
but
last
that's
30
not even
days.
from the peak. The peak was higher than that. So like if you go to scroll down a little bit more on the left side, it'll tell you like how far down it is from all time high. So it's down
77.
75% from all time high. Yeah. So that is even with a little bit of an increase from where it was a few days ago. Like, it was down to $15. So yeah, not good.
I see. So
Yeah.
Solana's had a rough ride.
Yeah.
Well, actually,
ETH is
um,
moving. Yeah.
moving as we speak
Yeah.
here, 28, 27. Let's take a look at RPL. I better refresh this because maybe it's been changed. It's at $7.49.
Well, you really want to
Um,
go to the 1 month view here,
yeah, let's take a
because
look.
you missed out on some interesting stuff that happened. So there's a little bit of a spike right there that you can see. That was RPL, like, was with all the
Wow.
crypto, like, it was doing really badly. It went down to $5, I think, and 1 cent, or $5.04 on Binance. So it got hit really hard. And then over the course of a few days, it had a nice run up to
Yeah,
around $9 or
$12.
so. And then it retraced a little bit, but it was holding it really well. And then it had this huge, like, monumental run up to $12 pretty much. So it
Yeah.
was it was a very nice few days there for RPL. The price was doing really well. And then we've retraced some of that move. But if you have a look on the 14 days, we're up
Yes.
21%. So
Yeah.
like we're up above where we were before we started. So the fact that ETH is up 2%, RPL is up 22%, it means that we've gained on the ratio, which is nice. But it was getting really bleak there for a few days, and
Yeah.
thankfully, we've been able to bounce out of that.
When I recall, I think our last show, RPL was in the $5 range,
Hmm.
between $5 and $6, as I
Yeah, it's
recall.
just
So
after that is when things started to get nicely heated up. So
I'll
yeah,
tell you what, for all of our Rocket Pool community, I will go on vacation again for a couple weeks and we'll see another 20% gain. And
yeah,
I'll just continue doing that all year. I don't
yeah.
mind
Do it,
doing,
please. Yeah, let's do it.
if that's
I'm
what it
okay with that.
takes.
Yeah.
Um, One thing we haven't checked in a while is the deposit pool, and we
Hmm.
had some movement on that as well, which was I think that was really the story of the week.
Yeah.
Back on the as we if you're watching with us, I apologize for the ones who are listening, but we're looking at the deposit pool, daily deposits. And if we just look at February, most of the days you got these just double digit deposits or sometimes single digit deposits of, 25 ETH, 50 ETH, and so on. But then starting around, let's say the last week here, on the 16th, we had 7,745 ETH deposited in just one day. And then that followed up with 174. Then we had a little fall off on the 18th. But then, 19th and 20th, we had over 300 each day. So it seems like things are starting to ramp up a little bit. And because of that, we've also had a decrease in the amount of mini pools that are in the queue. So a lot to talk about there, and we'll get to the rETH discount on the secondary market in a second. But what do we? I saw that there was several different wallets. This wasn't just one wallet doing this, which was good to see. Do you have any insight about what happened?
No, I don't, sadly, and I've been trying to figure it out, but I don't have any insight on what caused those mints that happened at that time. I yeah, I don't have an insight into that, but hey, I'll take it. Like, it was, and it doesn't look like the people have dumped it since then as well. So
Yeah.
it's not quite like that Nestle situation
Nesso.
where they got so much and then they dumped it all. But yeah, like it's a great, like, the queue was above 500 and it went down to like 250, and now we've, like you said, we've had a couple of days of some more deposits, so things are still kind of moving. I even saw people in the Discord saying they're going to use this opportunity to spin up more validators. So that's really great to see. Gas is so low, like, down to single digit GUIs, like one GUI, even below one GUI at times. So joining the queue for a few days, even a few weeks, I think isn't too much of a problem, because you're getting in on such a low price that I think that they can do really well there. So that, I think, was really, really good to see that there's a bit of positivity coming around the staking again, and people actually wanting to join the deposit queue, but sorry, join the validator queue. But yeah, the thing with the deposits is like, one of the things that's been happening alongside this this minting of rETH is that the secondary market, like you were saying, that the rETH peg is back to closer to being what it was. So what happens then is, like, people will just be more willing to mint instead of trying to get that discount. So yeah, let's go have a look at that, and we can talk about it in a bit more detail then. So
Yeah, someone just did it. So, I think when last time we recorded, this was up around 1%. And now we're down
1.1%. Yeah.
Yeah, and now
Yeah.
that's you're starting to get into worry territory when you start getting into over 1%. So
Yeah, so that's like 3 or 4 months worth of rewards basically that you're
Yeah.
losing. Because if you're earning 3% basically on your rETH, which is actually closer to like somewhere between 2.5 to 3%, because there's not much MEV rewards nowadays. But you're losing like 4 or 5 months worth of rewards at being at that price. It's a really bad experience. Like, that nobody wants to see that, right? Like, it's just horrible. So there are two things that have happened that have kind of helped us go back to peg. The first
well,
is that
let's talk about that first. So right
Yeah.
now it's 0.07 so we're under
Point- yeah.
we're under 0.1% discount.
Yeah.
And that's kind of a healthy area to be. STETH is at 0.02.
Yeah.
And everyone else is higher than rETH at the moment. So
Yeah.
this is a healthy area to be in.
Yeah, and I think that yeah, exactly. So there's two reasons why this has happened. The first is Trooper's exit ARB, program that he made. The script and the actions that it does is, as you exit your validator, you can ARB that yourself. So people are making, I think the highest I saw was a quarter of an ETH at 1.1% depeg. That was a huge incentive for people to exit their validators and try to ARB that for themselves. So enough people did that it helped us go close to peg. And then the second thing is, there's some campaigns on DeFi like Contango and others that people are using it to loop rETH. And as you loop rETH, as if you're buying it at that discount, then as it goes back to peg, when you unwind it, you can get multipliers on your rewards. So that was a really smart thing that some people did as well. And that, I think those incentives are still ongoing for now. So that's why we're in a good position here. I think that this, as long as we don't have a protocol level exit system where someone can go to the protocol and saying, hey, I want to get my rETH back, like, can you give it, give me, I want to burn my rETH, can give me my ETH back at protocol rates. And then in the background, the protocol is like, yeah, we'll tell some node operators to wind down their validators, and then we can, give you your ETH back. And until we get that mechanism, there's a possibility of these depegs kind of happening, going into the future, because it's a really fine balance, right? Like, how much money will the node operator be willing to take to exit their position? We know now that, at like a quarter of an ETH, or like, 0.2 ETH, that's really attractive for a lot of node operators, and people are just like, yeah, I'll definitely take this. Even at 0.1 ETH per validator, I think people will like be happy with that. Right now, though, that number is, 0.02 or something. I don't think it's going to be as much of an incentive for people to exit, right? Like, it's just not going to happen. So there's an equilibrium point that it might reach, unless, the DeFi stuff keeps going, and we can kind of keep that bridged from there. It might be that, going forwards, we have some kind of slight depeg, like maybe up to 0.5%. And, in like unusual circumstances, it might get back up to 1% again. But at that point, I think there are a lot of people ready to take advantage of that in a way that they weren't there like just a few weeks ago. So, yeah, hopefully we've seen the worst of the depegs, and going forward, until we get mechanisms at the protocol level, there'll be outside mechanisms to kind of keep it closer to peg. So, yeah.
I was surprised to see the timing of those deposits directly through Rocket Pool. Like the day we had over 7,000. They could have. I think wouldn't the smart thing would have been to buy it on the secondary market at the discount, but instead they minted directly, which I'm not going to complain about. But I'm curious on what the thought process was for those who made those large deposits.
I think it depends on what contracts you're comfortable using, and what kind of like experience you're willing to have. When you go into the secondary market, even though everything's so battle tested, like a cow swap, or like if you're using cow swap, it's very, very battle tested, right? Like, that people have been using this for years. There's not been any hacks or bugs or anything like that. You should be fine. But what happens then is people, I think, want maximum safety rather than that little bit of extra reward. And when you're transacting in thousands of ETH, like, a little bit here and there won't make that much of a difference to you, as much as making sure that, what you want to happen is what happens. So I think there's that element to it as well, where they want to minimize smart contract risk as much as possible. Also,
slippage.
yeah,
you might have
there's
some
no
slippage
slippage, obviously, right? If you're going to the protocol, but what would happen is if you're minting that much, then there would be some, the price would move up as you're minting it. So that's a possibility. But like what I'm saying is, like, the closer you get to the peg, the more likely it is that people will just use the deposit pool instead of using the secondary market. And
Right.
that's what we saw with those, like, 300 plus ETH days going in, is I think people were just like, yeah, the depeg is so small, I'd rather just use the smart contracts directly. I think the best thing, if you are listening to this, the best thing to do is just go to CowSwap, because CowSwap will find the best liquidity on the secondary market, but also use the deposit pool as well. So if you want to get rETH, the best thing to do is just go to CowSwap and just do it there. I think the team is actually even working on an integration on the stake.rocketpool.net website in order to that route it through CowSwap as well. So
Yeah, that'd be smart.
Yeah.
CowSwap is like I feel like this is the last year of CowSwap's really been taking the market by storm. I don't use any other exchange. It's just, you don't have to worry about getting sandwich attacked with MEV, and it finds the best price for you. And just sometimes you get more, you get that little extra bonus when you do the exchange. All that it's been a great experience using CowSwap, and I
Yeah.
think that's be cool to integrate that with the website, the Rocket Pool website, right?
Yeah.
Make it easy for the user experience.
I think in the past they used 1inch or some
Yeah.
other system, and there were some problems where people got hit quite hard with sniping, and people like kind of front running their trades, and lost big chunk of ETH because they didn't set their slippage properly.
Yeah.
So that was a really bad experience. So I think that they're trying to mitigate that from happening and make sure that that kind of thing doesn't happen again because that was obviously horrible. So
Yeah.
that was really bad.
Yeah, the cow swap, the blind auction, I think they call it, right? Where you have these bidders who are bidding on your trade, and they don't know what the other bidders are bidding, and then you get the best price available.
Yeah,
And it's kind of I know it's kind of off chain the way it's done, as I understand, but
yeah.
it's really elegant and it works, and you don't have to worry about MEV attacks and sandwiching and all that stuff. So it's a really good experience.
Yeah, the
Um,
only downside to CowSwap, sorry, this is a bit of an aside, is that it sometimes takes a little bit longer to get a transaction through. And sometimes, like, if you want to rush, like, if you want to be quick about it, then it might be that, it might be better to go to Uniswap directly or like a different AMM directly and kind of eat that slippage potentially if you want, like, because what when I trade my trench tokens, like CowSwap's really slow because it takes a long time to get those rates and everything ready. And I have transactions that just like kind of sit there and go nowhere. And I have to like prompt it again and again, and then I just end up going to like a different platform and just buying the tokens through there instead, and then it happens right away. But at least like the experience, I might not be getting the best rate, but it happens right away. So
sure.
yeah.
No, yeah, yeah. I think
Yeah.
for there's a different protocol for different types of users, right? If you're buying rETH, you're probably looking to hold it for a little bit, and you're
Yeah.
not worried about. Whereas if you're in the trench of a hot AI token that just launched, and it's a tiny market cap where seconds really matter,
Yeah.
then a different exchange is going to work better for you. So
Yeah.
different strokes for different folks, as they say, right? Another news item, I like this. This ties in this next one with Karpatkey. Ties in a few different things, and I remember Karpatkey. I want to say it was a couple of years ago. They got some heated criticism from Rocket Pool because they're with an organization that helps manage treasuries for different protocols, and they were going around really pushing Lido, and in that they don't want to include our ETH or any other LST, and so they caught some heat about that. But they seemed like they were digging their heels in, like no Lido, ST ETH, and that's all. But they had this tweet that they were talking about Nexus Mutual, which is another tie-in to Rocket Pool. Nexus Mutual was a success story. They minted I can't remember, what was it, 600 or
14,000.
1,000? 14,000 ETH through Rocket Pool to help diversify their treasury. Nexus Mutual is like an insurance company in a sense. If you want to insure against a DeFi hack, you can buy an insurance policy through Nexus Mutual. But here, this news item was, they say expand treasury allocations in the Rocket Pool are ETH, EtherFi, Spark, Balancer, Aura, and Aave. So the big thing there is Rocket Pool are ETH, and it sounds like maybe they've changed their tune a little bit, Whack, in terms of diversifying treasuries. I guess we'll have to wait and see if that actually happens. But as we know, Nexus Mutual already has our ETH. But the fact that they said this sounds like they plan on buying more along with these other tokens. What are your thoughts?
Yeah, so this is interesting. Like you said, Karpatkey was someone that the community was really critical of because they were pushing Lido to all of their treasury management clients. It looked like they had some kind of like sweetening deal with Lido. That's just speculation, but that's kind of what it looked like on the outside. Now, what's really interesting here is that they were hired by Nexus Mutual to manage their treasury, and Nexus Mutual already had our ETH. So I think that's kind of the crux of it, is that they said, we have our ETH, we like our ETH, we want to keep our ETH. So Nexus Mutual weren't going to like say, hey, go swap this for ST, right? Like Lido or whatever else they're into nowadays. So I think that's part of it. So maybe we can't think of it as like, a shift in Karpatkey's philosophy as a whole. It might just be because of the new partnership with Nexus Mutual that it's just kind of like being grandfathered in. What's nice to see though is like they're expanding their treasury into these other assets, of which Rocket Pool's rETH will be one of them. So hopefully they'll be minting more rETH. That would be really good to see. But yeah, this was definitely interesting to see that Karpatkey were kind of acknowledging Rocket Pool here in a way that they've never done before. So maybe it's a crack in the dam, and maybe they'll take their Nexus Mutual's experience with Rocket Pool and apply it to their other treasury partners.
Yeah, and I think emphasize enough the fact that we got the rETH discount back to peg, and it looks more stable that way. And into our next item here with the STAR program, when we're pitching to different protocols, rETH, if there's a large not deep peg, but a large discount, that's the first question that might come up. They say, well, I don't know, STETH is always at just around peg, and rETH is a % off. So now that we're back to peg, I think this makes the STAR program better. As we know, this program allows community members to reach out to different protocols and make the pitch to invest in rETH and other things. So could you summarize this for us real quick?
SignalXU was hired by the GMC to be the overseer of the STAR program, which is the searching out treasuries and large ETH holders and convincing them to swap their ETH into rETH. SignalXU here is just putting out update on what's been happening so far and what has happened in the past and what they're working on towards the future. Like, it's very early days right now, so what will happen is that you'll see like there'll be maybe not that much news in terms of what's actually going on, but as the days and weeks go on, we'll be seeing more and more things, deals that are in the early stages, hopefully some deals that reach intermediate stage, and then hopefully some deals kind of going over the line and them resulting in rETH being minted. That would be really, really cool to see. But it's early days right now. Like, there's not too much information here, so it's just a matter of waiting and seeing.
Yeah, I'm hoping as this ramps up, over the course of like 6 months, we'll see some significant investments made by the outreach from our community members. The next item, on-chain voting. Okay, so there's two things that happened here. We had a vote. Our PIP 64 came to conclusion. It reduced the quorum down to 15%, I think, if I got this right.
This is for on-chain voting, yeah.
Yeah, on-chain voting.
Yeah.
So this was, and then what is now, we got our first on-chain proposal, and it's proposal number 1. Shifrin created it, and I'm just going to pull up the next here, and Langer's kind of summarizes what we're doing. So this is regarding the oDAO, and to give some context, I saw some analysis by Ken, who did a analysis of he helps run the Rocket Scientists oDAO, and the summary is, over the course of the last year, the amount of compensation given did not cover the costs of running the oDAO node. And so what this RPIP, or this number 1 on-chain vote does is it tweaks the inflation that's given out every month and gives a little bit more back to the oDAO and a little less to the protocol DAO. And it just by like a percent. So currently the oDAO gets 1.5% of the inflation. It would get 2.5% if this passes. And the protocol PDAO would go from 28.5 to 27.5. So just a little tweak there so that it becomes worth the time, I guess, if you're an oDAO member to run the software, run the hardware. So this is kind of cool because this was in Houston, was on-chain voting, and we are now about 8 months past Houston, and we're now first getting our first on-chain vote. So that's kind of cool. You have any thoughts on this?
Yeah, so this, like you said, it's in 2 steps. So the first step was RPIP 64 that went to vote, and it passed with like almost 100% agreement with that. And that was just bringing the snapshot vote threshold in line, the on-chain vote threshold in line with the snapshot vote threshold. And that was just like, purely administrative, just to make sure that it all lined up properly. And then once it all lined up properly, then what happened is that we started the vote. And the first vote, like you said, is just to tweak those parameters a little bit. Those are the kind of things that will happen with the on-chain voting, is these parameter settings and things like that, because it'll be overtaking the duties of the Guardian wallet, and this kind of is what it's for. So with that first vote that comes through, the process is kind of slightly different from the snapshot votes that we have. So once the vote is introduced, you have 1 week basically to look over the vote, make sure that everything that the vote says will happen is happening properly. Like, because once the vote passes, then it will change the settings of the Guardian wallet. So that is really important that we do that properly. And yeah, you'll have a week to check it out. Then there'll be another 1 week period where people can vote. So if you are a delegate, then you'll be voting in that 1 week period. And if you have made yourself the delegate, then you can just leave it to your delegate to do that. And then or you can delegate. If you delegate to yourself, then you can just go and vote as well. Then that's the second week, and then the third week is to make sure that everything is okay. So if you for example, if you delegated your votes for me and then I voted in favor of something, but you don't like that, then that third week is a time where you can override my vote as a regular node operator and just vote however you want. So you can vote for instead of against or against instead of for, whatever you prefer. That's when you can override your delegate. So there's going to be 3 stages to these votes now. And then the other thing is then there's also a veto option. So if someone makes a suggestion that they want to put this thing through, like this change to happen, and then the community can say no, we don't want this to happen. And that's separate from a veto, because if you veto it, then the person will lose their bond. So there's different ways. There's one thing that the vote doesn't pass, which is fine, the person will get their bond back. But if the vote is vetoed, then that person will actually lose their bond. And I think if you go back to the previous tab, the one next to this where Shifrin put the vote through, I think the amount that he put down was 100 proposal bond is 100 RPL. So there's some actual money that he put there, just to say that this is what we're doing. And then when this vote passes in 2.5 weeks time, hopefully, Shifrin is going to put proposal number 2, and then that's going to tweak the protocol percentage. So where the money is going to go between the IMC, the GMC, and the PDAO. And I think Shifrin is going to ask for a little bit more money coming into the GMC at the cost of the PDAO Treasury Fund. So those are a couple of votes that are already lined up. I think Halulu already has some vote ideas lined up as well of how the money will be dispersed to the IMC and GMC and the PDAO as well. So these things will be coming up. And this is why we had this delegate system, is because gas costs are a real cost. So the delegates will just pay that gas cost instead of every node operator, because this will be on chain. You'll be making a transaction that might cost $1, $2, $10, depending on gas prices, and those delegates are the ones who'll be paying for it. So you don't have to worry about it.
Yeah, it's cool. This is whole part of the decentralizing the protocol even more by reducing the Guardian wallet's responsibilities and having the community vote on things, and those votes just automatically then being implemented on chain, like changing these percentages and things like that. It's cool, and that separates Rocket Pool from the rest.
So in the past, it would just be Langers. We'd say, hey, Langers, we need to change this parameter. And he'd be like, yep, done. And, that's fine for speed and efficiency. But for decentralization, that's really bad, because there's some really big things that, they could tweak using those parameters. And we definitely don't want
trusting Langers or trusting whoever has access to that wallet. We don't want to trust. We just want to, we have code do it instead. So, okay, on to the next thing. This is Val doing Val things, as I say. Val had this I think he updated this back in October. This is a chart that a spreadsheet he keeps of helping to compute what the RPL ETH ratio would be based on different parameters. He made an update to it, so about 5 months later. And you can play around with this. You make a copy of the Google Sheet, play around as much as you want. I'm going to spend a lot of time on it, Whack. But it depends on how bullish you feel about future growth. And you took some time the other day talking about one thing that this spreadsheet doesn't take into effect or take into account is the speculative premium. All right, this is just baseline, strictly just numbers, and that's it. And as we have seen before, prior to Atlas, when the price of RPL was skyrocketing. The RPL ratio was going up to all-time highs. There was a speculative premium on top of it, which was great to see. And so it all depends on market dynamics in a lot of ways. You have the fundamentals, and then you have the speculation on top of those fundamentals. So this is a fun sheet to play around with, though. The link will be in the show notes. So any quick thoughts on the spreadsheet from Val?
Yeah, so like I said, there's a lot of assumptions in here as well. So this isn't like pure objective data. Like there's some parts of it that are pure objective data, but there's other parts of it where you're already putting in your assumptions, and all of that, of course, like you said, can be tweaked. So that if you make a copy of it, you can go and do that. But what I found really interesting looking at this is the ratio of RPL to ETH right now. Is putting in very, very little speculative premium on Rocket Pool's growth. It's like 60% basically, which is nothing, right? That's a very, very, very small amount of growth that the speculators are assuming. And that's just because the price has been down so bad, right? That people just haven't. It's just just gone down so much, like that. That whole idea is just kind of like gone out the window, but you see that there's tokens out there, and like not even other tokens. Like if you just look at RPL, around Atlas time, there was a huge speculative premium into the RPL price. I think it was like 20x basically from the fundamental price. And what's going to happen with this with the Saturn 1 and Saturn 2 tokenomics is that the fundamental price is going to be a lot easier to calculate using these kind of methodologies. So you'll know that, just looking at the state of the protocol right now in this current moment in time, at some future point, you can put in the variables and you can see like what should the value of RPL be based on these variables. So like Val does it here, like, it comes out to like 0.0026 or something, I think, something like that. Yeah, I forgot the exact number, but he was saying like, it's a little bit lower than what the ratio is today. And what the ratio today is saying is that, the price should be, or we should have around 800,000 ETH. We've got around 500,000 ETH or something along those kind of like the ETH amount. But as you start to put in any kind of, growth for the protocol, which of course we're hoping that we get with Saturn 1 and Saturn 2, the ratio will go up a lot. So the main takeaway that I got from this was that nobody is putting that, because there's this idea that efficient markets will say, hey, like there's product here, but we're not buying the product based on what it's doing today, but we're buying the product based on what it's going to be doing in a year, in 2 years, 5 years, 10 years, and we're going to kind of put that future growth, we're going to put that into the price of the token now. So price of the share now, pretty much. So with RPL here, you can see that very, very few people are actually looking at the long-term projections of RPL. What they're saying is basically with Saturn 1 and 2, with this coming up, there's only like, 60% growth, because that's what the ratio is right now, kind of factoring that 60% growth. I think that's very, very, very low. Like, not financial advice or anything like that, of course, but I think that makes RPL really attractive. And any kind of, speculative premium coming back and fundamental, TVL increasing will have outsized returns on that ratio there. So the main point is that, you can do really like clear calculations after Saturn 2 of what the RPL value should be based on the rewards that you're getting in ETH, and because of that, then you can add or subtract a speculative premium from it.
Right. Yeah, and then you get that rising tide lifts all boats. Like all of a sudden the altcoins get a bid, and it's the hottest thing. We've seen it with meme coins. All of a sudden meme coins take off, and there's no money's just pouring in. It's the same. At some point, these windows shift from asset to asset, and you get into altcoins, and then all of a sudden RPL's bid up, and then there's speculative premium, and then people are excited, and it just builds on top of what the fundamental ratio would be.
I think another thing as well to note is like before Atlas, when we had that huge bubble for RPL, people didn't really understand like what the fundamental value of RPL was. There were some calculations that said this kind of is the fundamental value, and it was a much, much lesser number. Like, it was 10 times lower than what the price was at the time. So there were people who were saying, oh, this is like, gone really far above where it should be, and maybe, it's time to sell. And some people did sell at that time. So, good luck to them. Congratulations. They did really well with that. But I think what will happen is, as you keep this fundamental value in mind, then going forward, it'll be like a reference point. So I think people will make decisions about holding or selling RPL depending on how far away it is from that base point. So there's some really interesting math that comes into it then, like some really interesting analysis that will change the type of asset that RPL is going forwards. Like it removes a lot of the speculation from it and instead puts a fundamental value. Now, for better or worse, right? Because with speculation, there's this idea that there could be infinite growth, right? Like, well, not infinite, but like tremendous growth. So people kind of like can get swept away in that. Whereas when you're dealing with fundamental values, then that people are more like level-headed about it, but then that also gives you a floor as well, hopefully. So
Sure.
there's some really interesting stuff happening there, I think. So this was a nice model to kind of make you think about that.
Okay. Our final news item for the week is the Smartnode update, version 1.15.3. It's got a whole bunch of client updates. You can see here, Geth, Bezu, Nethermind, Prism, Taku, Lodestar, Nimbus, Lighthouse, rETH, MEV Boost, all of them. They've got updates. So this is recommended. And I updated mine last night, whack. So I'm all good. And just as a reminder out there, if you're running a node, one of your responsibilities is make sure you're up to date. And I don't think we have much problem with Rocket Pool node operators keeping things up to date because they are the most passionate Ethereum aligned people you could ever find. And a lot of them are, they do this as not just a hobby, but as just something that they feel so strongly about. So me, on the other hand, I like getting these updates to remind me because sometimes I go a couple of weeks before I'll do the upgrade. So I was as soon as I saw this last night, I updated my node. So you're still running a validator, aren't you?
One
validator,
my personal one, yeah.
Yeah, personal one, yeah.
So I have one validator.
Cool. Our final segment for the week is wins, and I have my win whack is I went to the Netherlands for a week. I recharged. It's one of my favorite places in the world, and I didn't follow any news. Basically, turned the phone off. Didn't follow any crypto. So it's been a couple of weeks since I looked into things, and I feel great. And as I said last episode, I'm working on this new job I'm beginning and calling it a career at the IRS. It's been pretty chaotic at my office. We had about half the people fired yesterday, and I think there's more coming, unfortunately. So I'm kind of wrapping that up in my life and starting this new chapter, and I'm kind of excited. So
amazing.
That's my win. Yeah. How about you?
This is going to sound really like counterintuitive, but my win of the week is the Libra token. Like, I don't know if you heard about this or not, but this was the token that was promoted by Milei, like of Argentina, and it was a meme coin that was launched, and it ran from pretty much 0 to 4.5 billion in a matter of minutes, and then in another matter of minutes it went pretty much down to 0. Well, not quite down to 0, but like it lost almost all this value. And I think what happened is with this, the reason why it's my win of the week is that a lot of people have just said like the meme cycle is dead. And the reason why that's my win is because I think that this might be the beginning of hopefully a reallocation in crypto to more serious projects and more serious ideas.
Thank God.
Yeah, I hope so.
God.
I don't think memes are going to die.
I just hate meme coins. It's not why I got into this, and I know it's always going to be that gambling, that part of crypto and things. But I want to get back to like things that have real value, and so thank God. Well, hopefully that's over, but we'll see. Go ahead.
And it looks like there's and just to show that, like, there was another report of a celebrity. I don't want to name them because I don't want to put any attention on that. Today, saying that they're on the verge of launching their own meme coin, and it's going to happen any minute now, kind of thing. And what what happened is I was looking at the replies to this story of this this news breaking, and everyone's like, "We don't want this. We don't want this. We don't want this." Like, and I was like, "Oh, thank God!" Like, it
Yeah,
looks
yeah.
like we're finally turning a corner with this. Like, for people just understanding that this is not something that we want to take part in anymore, because so many people lost money. Like an absolutely astronomical amount of money was siphoned away from this, like billions of dollars, and people got hurt really badly, and it's just put crypto back, I think, in some ways, like, really badly. So hopefully this is a new like era of crypto, hopefully. Like, we can be hopeful, but that's what I'm hoping right now.
Well, that sounds like a hope and not a win, but
Well,
maybe
it's
the
a win that it's
death.
happened, and like there's already like the sentiment has already shifted. So
Yeah,
that's what I
yeah.
win.
The death of meme coins is a win if that's death, temporary death, because they'll
Yeah,
come back at some
it'll
point.
never die. It'll never
No,
die totally, but it might just be like, hobbled potentially.
right.
Yeah.
Okay, well, on that note, thanks for watching, everyone. We appreciate it. Like and subscribe. We will be back next week for another episode. Until then, keep watching Rocket Fuel with Whack, and we'll see you next week. See you, Whack.
See you, Pat. Bye.
Bye.